You're welcome back to Business Incorporated on Channels Television. Now, numbers show dramatic rise of terrorist attacks in Africa over the past 6 years. A new report released by IHS Incorporated in London shows that the number of militant attacks in Africa rose dramatically between 2009 and 2015 and has done a lot of economic damage. Now, let's talk to the head IHS Jane's Terrorism and Insurgency Research Center in London, Matthew Inman. Matthew, welcome to the program.
Thank you.
Islamic militancy has grown over the past 7 years. Tell us what led to this rise.
We've seen a dramatic expansion on the continent, really, particularly in West and North Africa, of Islamist militants being able to spread and develop their influence. Obviously, from 2009 onwards, we saw in Mali a particular expansion of Al-Qaeda's local affiliate there. And of course, in Nigeria, Boko Haram from 2010 onwards has gone from strength to strength, really expanding across the northeast of the country and becoming a very, very serious threat indeed.
Now, let's talk about the intensity of the spread of militancy in Africa. What do you think is fueling this across the continent?
Well, I think these movements are growing in strength where there is a sizable Muslim population, where there is a population who it can appeal to and strengthen. I think the fact that you have groups like the Islamic State, which have a strong territorial base now, they're able to project strength from there. They're able to send their forces from Iraq and Syria to places like Egypt, to Libya, to link up with militants in existing countries, whether that's in Nigeria, Somalia, other parts of the African continent, and thereby to support, propagate and spread the activities of groups already there.
Now, it is noteworthy to state that the various groups identified in your report as spreading operate in major economies in Africa. How do their activities impact on the economies of the affected countries?
Well, they have a major economic impact on the countries. I think particularly in countries which have a very high economic output, like Nigeria, the instability caused by these groups, even when they're unable really to penetrate the inner security of Abuja or to really threaten Lagos to any great extent, the instability caused in the country nonetheless, the high numbers of casualties caused, is always going to have a substantial economic impact. But I'd stress that the impact would be far worse if these groups were able to actually penetrate into the centre of Abuja itself or threaten Lagos or the oil terminals in the south. The fact that they aren't doing has mitigated to a certain extent the economic impact of their activities.
And just as some of the groups have alliances with other groups around the world, countries in Africa also seek alliance from the superpowers. Now, is the partnership between African countries and other countries yielding any fruit in the fight against terrorism?
I think we're seeing in specific cases instances where partnership with the international community, and particularly with the Western community, has had an impact on the issues of terrorism in those countries. So in Mali, we saw obviously a direct French military intervention, which led to militants in the northeast of the country being forced to relinquish the territorial gains that they'd made and being forced into the mountains and the hills on the border with Algeria. Now, that threat hasn't gone away, but it's diminished somewhat. Now, elsewhere in Africa, though, you see different levels of international cooperation and presence in the country. For instance, in Somalia, we have sporadic United States drone strikes against Al-Shabaab, and in other areas of the country, of the continent rather, should I say, you have intelligence sharing and training efforts to try and bring local security forces' capabilities up to a higher level so they can more effectively target and combat these forces.
Matthew Inman, the head IHS Jane's Terrorism and Insurgency Research Center in London. Thank you so much for your time. Okay, let's move on now as we bring you the Central Bank of Nigeria says it's actually been meeting with operators in the BDC section of the FX market to discuss the modalities of the operations under the new FX policy dispensation. The bank met with the Association of Bureau de Change Operators in Abuja yesterday, and today the Apex Bank is meeting with them here in Lagos. Now, business news correspondent Temple Ashaju is actually at the meeting and it joins us now to take a look at what's been discussed at that meeting. Temple, good afternoon.
Good afternoon, Balaji.
Now, what is the meeting all about?
Balaji, you're aware that the BDC operators have been requesting for foreign exchange primary dealership from the CBN since the announcement of the guidelines for the Naira settled OTC futures market. And of course, this meeting is to bring all the stakeholders, traders, regulators, customs officers, buyers, and some other people that you may want to refer to as ordinary sellers of FX together and see how they can brainstorm on how they can key into this OTC Naira settled market that has been introduced by the CBN, but also to take a look at the policy, discuss their own side of their own fees with the regulator, the Central Bank of Nigeria, of which we had a representative who was also present at the meeting. So far, they've been able to discuss their concerns with the regulators, and of course, it is expected that something productive will come out at the end of the day.
So we're expecting a kind of final agreement at the end of the meeting?
Well, perhaps the communique will surely. First of all, the operators raised a couple of concerns. They spoke about the fact that they were completely excluded from the new flexible exchange rate policy that was introduced by the central bank. In their own words, in the words of Mr. Aminu Gwadabe, the acting president of the Bureau de Change Operators of Nigeria, it says they noticed the complete exclusion of BDC from VIP clause.
Okay. Temple Ashaju, business news correspondent with Channels Television there. Okay, let's move over now as we talk about the FMDQ Forex markets. Of course, that is more like the latest bride here in Nigeria's financial market. The first Naira settled OTC FX futures trades has been executed today between the Central Bank of Nigeria and Citibank on the FMDQ OTC Securities Exchange platform. The trades were executed on behalf of foreign portfolio investors. Now let's talk more about the FX market with Forex dealer at FSDH Merchant Bank, Collins Akenemen. Collins, thank you for joining us on the program.
Good afternoon. Thank you.
Good afternoon. Now, the first Naira settled OTC FX futures trade has been executed today. What does this mean for the market?
Yes, that is actually very good news because what that means is that the demand that was hitherto brought forward to the spot market, which shouldn't be, will now be met in the futures market, thereby reducing the pressure on the local currency. So what we're seeing now, where the market is trading at 280 level, might over time taper downwards because the futures market is more attractive. If you look at what the CBN had brought out with respect to the futures rate, the 10 months forward, better still, 10 months futures rate is about 210, which is a 70 Naira discount over the current spot rate. So that is a major attraction for those who don't have obligations maturing now, but that are maturing in future. So they can delay the demand and then access the futures market as a result of that.
So what is the sentiment like in the markets based on this development?
The sentiment is very positive. The challenge in the last 16 months had to do with the FX peg and then the issue of liquidity. Right now, because of the new policy, where there's flexibility in the market, and also the fact that CBN has cleared about $4 billion of outstanding demand, the sentiment is very, very positive. So there's liquidity to meet outstanding demand, and then Going forward, we expect that foreign investors will find it attractive to bring in their money, and then everybody will be sorted out.
Thank you so much, Collins Akenemen, a Forex trader at FSDH Merchants Bank. We'll go on a break now, and we'll be right back. You're welcome back. Now let's take a look at the FX fixed income markets, talking about the FMDQ OTC securities now. I'm joined by a fixed income dealer at Access Bank, Femi Akinyemi. Femi, good afternoon and welcome to the program.
Good afternoon. Thanks for having me.
The central bank was at the market today for Treasury bills auction. What is the sentiment like at the market?
Well, for the Treasury bills market, where we've seen more activity in the last few days, what we saw today was market opening by an average of 100 basis points lower than where it closed yesterday. But however, that wasn't sustained for long, because what we saw shortly after was profit-taking selling across board, with the 1 year trading around 11%, and the short tenor bills trading around 6, 7, 8%. So it was a net drop of an average of 50 basis points. But on the bond side, in the bonds market, the last few days has been a very quiet market. What we've seen, just a few trades done here and there, turnover not as much as 5 billion at the end of trading. And then same thing has happened again today, or has been happening, like I said, same thing happened today. We just saw a few trades done across board. Market sentiment is still skewed towards a rise in yield. So market, we are not really seeing so much activity going on in the market.
Okay, let's talk about liquidity. I want to believe that there's been more activities in that respect. How has that improved?
Liquidity improved somewhat after FAC was credited into the system, and we saw OBB rates in the market drop from a high of about 60% to 30%. However, the sentiment, like I said, is still a rise in yield going forward, considering that the third quarter issuance for the bond auction increased by about 100 billion, and then for the T-bills auction, we also saw the government issuing about planning to issue 160 billion more than what will mature in the third quarter. And then the fact that they sold the last 1 year Treasury bills at an effective yield of 17%, and also sold the 20-year bond at the last bond auction at about 15%, gives us an indication of how high they are willing to borrow and how much they are willing to borrow. So generally, the market's sentiment is the rates would cross 15, probably get to as high as 16, 17 levels, and then with a further projection of an increase in inflation going forward, everything is just skewed towards a rise in yield going forward.
Okay, thank you so much, Femi Akinyemi, fixed income dealer at Access Bank. And that brings us to the end of Business Incorporated. Thank you so much for watching. I am Bolaji Akinwale.